Premier Energies bags 3,011 crore rupee orders, solar growth story gets stronger. Premier Energies has started FY27 with a major business milestone by securing fresh orders worth 3,011 crore rupees. The announcement strengthens the company's growth outlook as demand for domestically manufactured solar equipment continues to accelerate. The orders were received during the April to June quarter and cover the supply of 1,846 megawatts of solar cells and modules. Deliveries will be executed across FY27 and FY28, providing strong revenue visibility over the next 2 financial years. For investors, order inflows are among the most important indicators in manufacturing businesses. A strong order book not only reflects healthy demand but also improves confidence in future revenue growth. The latest contracts have been awarded by a diversified group of customers. These include leading power producers, module manufacturers, EPC companies, and several other institutional buyers. A diversified customer base reduces dependence on any single client and lowers business concentration risk. It also demonstrates that Premier Energies has established credibility across multiple segments of the solar value chain. Management highlighted that these orders reflect customer confidence in the company's manufacturing capabilities. Product quality, timely execution, and technological expertise continue to remain key competitive strengths. India's solar industry is currently witnessing one of its strongest growth phases. Rising electricity demand, lower solar generation costs, and government incentives are driving significant investments in renewable energy. The government's continued focus on domestic manufacturing under the Make in India initiative is creating favorable opportunities for Indian solar manufacturers. Policy support is gradually reducing dependence on imported components. One of the biggest positives for Premier Energies is that these orders come at a time when the company is aggressively expanding its manufacturing capacity. Capacity expansion allows the company to capitalize on the growing demand environment. The company's module manufacturing capacity has recently doubled from 5.5 gigawatts to 11.1 gigawatts. This significant increase positions Premier Energies among India's leading solar module manufacturers. Solar cell manufacturing capacity is also set for a major jump. Management expects capacity to increase from 3.6 gigawatts to 10.6 gigawatts by September 2026, almost tripling the company's production capability. Expanding both cell and module manufacturing strengthens vertical integration. This improves supply chain efficiency while reducing dependence on external suppliers for critical components. A larger manufacturing base also enables the company to bid for bigger projects. As India's renewable energy installations continue to rise, scale becomes an important competitive advantage. Managing Director Chiranjeev Saluja described the current phase as a high-growth opportunity for the company. He emphasized that booming solar demand and supportive government policies are creating a favorable business environment. A key policy development highlighted by management is the implementation of almm though. This policy is expected to encourage greater adoption of domestically manufactured solar cells across the country. The approved list of models and manufacturers framework is designed to strengthen India's domestic solar manufacturing ecosystem. Companies with established manufacturing facilities are expected to benefit the most. Government initiatives supporting local manufacturing also align with India's long-term objective of achieving energy security. Reducing dependence on imported solar components remains a strategic national priority. Premier Energies has consistently invested in advanced manufacturing technologies and higher efficiency products. Continuous technological improvement helps maintain competitiveness in a rapidly evolving industry. Another important takeaway from this announcement is the company's execution track record. Large customers generally award repeat business only to manufacturers capable of delivering quality products on time. Execution capability becomes increasingly important as manufacturing capacities expand. Efficient project delivery not only improves customer satisfaction but also supports future order inflows. For investors, the combination of a growing order book and expanding manufacturing capacity creates a positive long-term outlook. Capacity expansion without sufficient demand often creates risks, but Premier appears to be witnessing demand alongside expansion. However, investors should also monitor how efficiently the company converts these orders into revenues and profits. Order wins are encouraging, but execution quality ultimately determines financial performance. Another factor worth tracking is operating margins as manufacturing capacity expands. Higher volumes should ideally improve economies of scale, although raw material prices and competitive pricing remain important variables. India has set ambitious renewable energy targets over the coming years. Achieving these goals will require substantial additions in solar generation capacity, creating long-term opportunities for domestic manufacturers. Competition within the solar manufacturing industry is also increasing as several companies announce large capacity expansion plans. Maintaining technology leadership and product quality will therefore remain essential. Premier Energies appears well positioned to benefit from structural growth in India's renewable energy sector. The company's investments in capacity, technology and customer relationships provide a solid platform for future expansion. Overall, the 3,011 crore rupee order inflow represents another significant milestone for Premier Energies. If management successfully executes these projects while commissioning its expanded manufacturing facilities, the company could further strengthen its position in India's rapidly growing solar industry. The global transition towards renewable energy is also opening export opportunities for Indian manufacturers. Companies with integrated production capabilities could gradually strengthen their presence in international markets. Financial strength will become increasingly important as expansion projects move towards completion. Efficient capital allocation and disciplined execution can improve long-term shareholder value despite rapid capacity additions. Investors should closely monitor the company's upcoming quarterly results for capacity utilization, order execution, and margin trends. These metrics will reveal whether operational growth is translating into sustainable financial performance. Overall industry demand remains favorable as utilities, commercial consumers, and industries continue adopting solar energy. If policy support remains stable, Premier Energies appears well positioned to capitalize on India's renewable energy growth story.